Spot trading is one of the most straightforward and widely used methods of buying and selling financial assets, allowing traders and investors to purchase or sell an asset at its current market price for immediate settlement. Unlike futures, options, or other derivatives that involve contracts based on future delivery, spot trading results in the direct exchange of ownership between the buyer and seller. This trading method is commonly used across various financial markets, including stocks, cryptocurrencies, commodities, foreign exchange, and precious metals, making it suitable for both beginners and experienced investors. In cryptocurrency markets, for example, spot trading enables investors to buy digital assets such as Bitcoin, Ethereum, or Solana and hold them in their wallets until they decide to sell. While in stock markets, it allows investors to purchase company shares and benefit from potential price appreciation and dividends. One of the greatest advantages of spot trading is its simplicity because traders only need to analyze the current market conditions, determine an entry point, and execute the trade. Without worrying about contract expiration dates, margin requirements, or complex pricing models associated with derivative instruments. Spot trading also offers full ownership of the purchased asset, allowing investors to transfer, store, or use it according to their investment objectives. Successful spot trading depends on understanding market trends, technical analysis, and fundamental factors that influence asset prices. Many traders rely on technical indicators such as moving averages, relative strength index, RSI, moving average convergence divergence, MACD, Bollinger Bands, and support and resistance levels to identify favorable buying and selling opportunities. At the same time, fundamental analysis helps traders evaluate economic conditions, company performance, industry developments, government policies, earnings reports, and market sentiment that may affect future price movements. Risk management plays a critical role in spot trading because financial markets are inherently volatile and prices can fluctuate significantly within short periods. Traders often use stop-loss orders to limit potential losses and take profit orders to secure gains once a target price has been reached. Diversifying investments across different assets can also reduce overall portfolio risk by minimizing exposure to the poor performance of any single investment. Unlike leverage trading, spot trading generally carries lower risk because investors are not borrowing funds to increase their market exposure, reducing the possibility of forced liquidation during periods of high volatility. However, this does not eliminate the risk of capital loss, making disciplined decision-making and careful analysis essential for long-term success. Patience is another important characteristic of successful spot traders because markets rarely move in a straight line and profitable investments often require time to realize their full potential. Emotional trading driven by fear or greed frequently leads to poor decisions, such as panic selling during temporary market declines or buying into assets after significant price increases. Developing a well-defined trading plan, maintaining realistic profit expectations, and consistently following predetermined entry and exit rules can help traders avoid emotional mistakes and improve overall performance. In addition, staying informed about global economic events, central bank decisions, inflation trends, geopolitical developments, and industry-specific news allows traders to anticipate potential market movements and make better-informed investment decisions. Whether used for short-term trading opportunities or long-term wealth creation, spot trading remains one of the most accessible and effective ways to participate in financial markets due to its transparency, simplicity, direct ownership, and flexibility. By combining sound market research, technical and fundamental analysis, disciplined risk management, and a long-term perspective, traders and investors can build confidence, improve decision-making, and increase their chances of achieving consistent success through spot trading across a wide range of asset classes.